Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics, where I've noticed posts covering finance and property news with a distinctively Australian flavour. It's a belated Monday evening, actually Tuesday, with Edwin. Hi Edwin, how you doing?
Well, Martin, technology and the cats, they just don't mix.
No, I have to say that when tech decides to, just give up, it can be very, very frustrating, right? It's like a load of dominoes fall over. One thing goes wrong, and then something else goes wrong, and then something else goes wrong, and off you go.
Yeah, it's just the laptop. The laptop died. That's my excuse. Dusty and Evan peed on the laptop, and he died. That's why I didn't get on last night. Yeah, not forgetting about. Don't even want to mention the tequila or the 43. All the beers that we had at lunchtime. So I don't think we were in a position one way or another. But yeah, technology. I'm just blaming technology, man.
Okay, fair enough. Well, yeah, technology is always there to blame, but it's working at the moment, which is good. And lots to talk about, of course. People are throwing money all over the place, aren't they?
And they're throwing it around like confetti. What's that? $64 billion for Twitter. You still haven't let on how much you're throwing at the CoreLogic Hedonic Daily Index.
Yeah. Zero, mate, zero.
In the meantime, the world is on fire. Stricter lockdowns in China. The Krong. They say it's out of control, but is it really? Is it other reasons why they're locking people down? Supply chain issues are just going to be magnified. Major global shift of immigration. Watch this space. There's going to be a major shift in immigration globally, in my opinion, and we're looking very, very pretty at the moment. Developers in Sydney taking out home buyers at auctions. It's an interesting story that I'll share about later on today. And Morrison kissing babies and elbow in the basement. What else could happen?
Exactly, and it's only Tuesday.
It is. It's only Tuesday, and then there's the imminent world food shortages, Martin. How do you like them apples? It's starting to really. I think. Look, I know it's not a mainstream screenshot of an article, but look, this guy's been pretty much on the ball with a lot of the things that he's been saying from a global perspective, and he's got more contacts than what we have in the global sphere, other than China. But we have to ask the question: what's going on in China? Because after all the lockdowns, the supposedly infections, infection rate, and everything else, not a lot of deaths other than people jumping out of windows and starving to death, and the sick not getting their medication. So, is it really the Krong, or is it for other reasons that they're shutting the cities down?
Well, certainly the thing is spreading rather than not at the moment, and of course more centres are being affected. But this food shortage issue is really very, very significant. There have been a number of reports from various sources in recent times about the fact that the cost of food are rising, supply is dwindling. And I was listening to somebody the other day who was talking about the problem they've got in the UK with sunflower oil. Some time ago, a lot of companies in the UK decided to boycott palm oil because, of course, palm oil is actually grown in areas where they just, mow over a native forest and then effectively plant palms and get palm oil. So they went off to sunflower oil, thinking, well, Ukraine is a safe source of sunflower oil, huge proportion of the global supply from Ukraine. But suddenly they can't now make instant chips and things and potato crisps and things because it all is requiring sunflower oil, which they can't get. I mean, things are getting serious when you can't get your chips.
Yeah, and what would Boris be thinking if he can't get his chips? I mean, he looks like he eats a few packets a day anyway, but hey, another story for another day. But look, the thing is, what a lot of people don't understand, and perhaps when you talk to them, when I talk to them, family and friends and others on social media, of course, is the fact that how all this affects as I alluded earlier on, the migration, the shifting sands, as I call it, you and I call it in our rants, of people looking at better futures. And this is what, all these things that are happening in China, the supply chain issues, the ongoing lockdowns. Needless to say, a week or so ago, we said that, and we got very credible information that the CCP were pressuring the WHO to actually lift the global pandemic status, and put so that Xi Jinping can get out of this zero tolerance policy that he's got, can get out, saving face, because whilst he's on a zero tolerance, there all sorts of shenanigans are going on there, and really, I mean, you sort of see all these people all mussed up, dressed up, gowned up, and throwing lime and shit on the streets of the main cities, allegedly trying to control this virus. But it's all, in many opinions of the WeChat chatters, it's all a show, because there are other reasons why this is happening. But on the one hand, you hear the stories of the CCP pressuring the WHO to lift the global pandemic status. And then on the other hand, we see a lot of this stuff that's happening online, and we don't know what's happening. But one thing for sure is that it's going to affect our supply chain issues here, and how people are going to be flowing from and out of China, and where they're going to be going.
Absolutely. And it is worth underscoring that, there is an argument bubbling around in Australia at the moment that we need to open the doors and allow more people to come back in. And, there are various classes of visas being created that allows people to rush back into the country. And of course, the business community are wanting a bigger Australia because they need more workers, they say. And of course, there's more property to fill. So let's open the doors. Let's turn on the taps.
And let's control the downturn values of properties. Let's put a base or a mattress underneath them, and let them spring back up again. But look, Martin, the latest report this morning was from the WeChat chatters, was that the Hong Kong and Chinese stock markets are crashing, have crashed overnight, and there's a lot of issues. So there is a lot of uncertainty. So you compound that with the uncertainty that the investors there in mainland China and Hong Kong have, and they're going to be start looking further afield in order to secure their investments and their future. So on top of that, you've also got the 10.6 million university graduates that pretty much don't have any hope or hell of getting a job, or the alternative is for further education. And we're talking about people that are in the middle to upper class of students, and they can get family backing to, guess what, migrate overseas to do a master's degree or further their education. And guess what, Martin, is that Australia's got that, as you were saying earlier, this open doors policy, welcoming new migrants with open arms for various reasons that you and I have talked about. So it's really opening up Pandora's box. So you've got the uncertainty in China with regards to their investments, not wanting to invest in crypto or bonds or other assets, and let alone property there, and the uncertainty moving forward with jobs, that there's no prospect of jobs. So really, when they start looking further afield, like as I've been saying over and over again, regardless of what our politicians have done, our state politicians have done to the people, we do look very pretty. We do look very attractive, in a number of things. And let's face the fact that to a lot of these people, like one of our colleagues, the parents own an apartment, a very small apartment in Guangzhou, and for now, obviously they've stepped up to this level. But their apartment, if they were to put that apartment on the market, they would get 20 million yuan, which is equivalent of about 4 million Australian. Now this, we don't realise how much more people also have to pay for apartments there in China. And when they look at our values, our property prices, we aren't that expensive. We're very expensive to the locals, very expensive to the local home buyers and the first home buyers, or even the downsizers or upsizers, whatever. But to the locals, properties become very, very expensive, and that's the unfortunate thing, because regardless of what we may think, there's a lot of money overseas. And to that point, a couple of our clients, separate, two different families, young, in the very early 30s, late 20s, early 30s, two young couples in IT, and they've told me the same thing. They're from different parts of India, and they've said, Edwin, if we were to buy the equivalent of what we're trying to buy here in Sydney, that we're helping them to buy here in Sydney, it would cost them 3 times as much in India. So they're still finding property here, the values in the western suburbs, very, very affordable.
Yeah, very interesting. And I guess the other point to think about it, there are a lot of graduates coming out of Chinese universities, right? A large number, many of whom will be unable to find the sorts of jobs they want locally. So again, another reason why Australia might be quite an attractive area to consider.
Well, that's correct. So in the financial year 21-22, employer-sponsored visas, the quota was 22,000. This is the highest quota among the all-skill visas, higher than independent skill visas in the past. In 2022, 2023, they want to increase that to 30,000. Now, let's keep in mind that the governments have also laxed the amount of hours that students can work. We've basically said you can work 40, 50, 60 hours, however many hours you want to work. They've extended the working hours, so it becomes more and more attractive. And again, that's a pathway to bring the rest of the family over. And this is the middle class that are very well off and will be very supportive. The other thing that a lot of people need to understand about the people that have basically graduated, the 10.6 million graduates, is that a lot of these people speak English, and they speak it very well, and they're also from the one-child policy group. So there's it's going to be a lot easier for them to get support to come to Australia. In when they're here in Australia, it's going to be a lot easier for them then to obtain PR residency, permanent residency status, and then buy property. In the meantime, they're going to be renting, and that's going to take up going to create a further strain with the local rental markets as well, particularly and predominantly with homes.
Yeah, but the observation then is that this is not so much about the coronavirus or indeed the lockdowns. It's much more about economic future, economic wealth, and where people are going to look to internationally to be able to achieve their dreams. And Australia looks pretty attractive, right?
Well, that's correct, Martin. And this is what we spoke about. We've been speaking about for the last few weeks with regards to once major cities in China were being locked down, and the way and the fashion that they were being locked down, people started talking, and we looked at the percentage increase in searchability for what countries that people would prefer to migrate to. In Australia, went up by 2,600 and something percent. Second in line was the US and Canada. Now, unfortunately, I wasn't able to get the snapshots of planes have already left mainland China, and plane loads of students and people have already moved from the people that can move, obviously those that have got connections. There's plane loads already headed to and landed in the US. So it's a watch this space. You and I said that the levers to control this property market downturn was going to be throwing more money at it, at the first home buyers and other government grants, watering down any statutory obligations by banks not to lend so frivolously, and the third, which is the one that I've been hanging my hat on, is opening up the floodgates to immigration for the various reasons. Because again, businesses here are calling for cheaper labour. The little brothers and the little sisters, they're not around, so therefore it's harder to get jobs done, on construction sites and building sites, and whenever you want to do renovations or anything like that, because that was a big part of the workforce. So then you've got your fruit pickers and everything else in the menial tasks that locals don't want to do and don't want to perform when it comes to also catering in the hospitality industry. So and cleaning, and the list goes on. So what's the option? And of course, the obvious thing is rather than increasing the wages so people can be more encouraged to go into these areas and these fields, the government's just going to, in my opinion, whether it's the Labor or the Liberal government, they're both, the left and the right wing of the same bird. So, it's going to be flick the switch and, open up the floodgates unless the independents can hold them back.
Absolutely, yeah. It does seem to be the way the die is cast. And of course, everybody keeps talking about the big Australia policy and how great it is for the economics. Just remember that GDP per capita has not grown in the last decade, right? So in other words, we might have more people, so the overall number might be bigger. But in terms of the individual contribution to individuals, there's no growth at all. In fact, it's going backwards. So just having more people coming in isn't necessarily a very good economic argument other than the macro top line. The other point is interesting that locally, it looks to me as though there's quite a shift in mindset. People were thinking about cryptos and commodity markets and the share market, but there's wobbles everywhere now. It looks to me as though there's much more thought, well, maybe land, not high-rise, but land or commercial warehousing, because that seems to be where a lot of the local focus now is.
Well, that's correct. And just before we got onto the recording the show, there was an article by Real Estate Commercial, the commercial app for REA. And the article was all about how overseas investors are flocking in to buy commercial and warehousing properties. That's our future. That's when we're not producing anything. We've said that the small farmers in the food basin of Sydney are basically ploughing their fields down and building warehouses because we're effectively become a warehousing nation rather than a producing nation, and hence even then we spoke about the issues that we're going to be facing with regards to food chain supplies and food, and food availability. I mean, we grow a lot of it, yes, over the mountains and everything, but the soil is not as rich, and a lot more has to go into it, like fertilizer. And guess what? With the supply chain issues with that as well. So I mean, the list goes on. So look, the local chatterers are looking into the commercial warehousing properties. They're looking more into land and freestanding homes. Is the local appetite. What the overseas new migrants do, I mean, don't have a clear picture as to what they will do. But again, because we have high numbers of apartments on market in comparison to 2021, and they're relatively cheap, or cheaper than 2021 anyway, and in some cases even cheaper than what these people bought in 2017. Well, one would think that that's going to be they're going to be taken up as well, and as more properties come on market of like Calgary, apartments in high rise and in areas where the young families don't really want to live or bring up their families anymore.
Absolutely. Well, it's interesting. I put out a couple of Twitters myself talking about the high number of free spare properties that are around. The best estimates, about 1.2 million properties are unoccupied in Australia, and that includes second homes, but it also includes those that have been recently constructed, those that are actually held vacant by people who are hoping that prices will go up later, so they're never intending to actually live in them, and those where they've bought them but they can't get any tenants. And I had interesting reactions. Quite a few people said, what, 1.2 million? You must be joking. No, it's nearly, it's closer to 300,000. But actually the 1.1 million, which I based it off, was actually from the last census a few years ago. The next census data is coming out in June and July. It'll be really interesting to see what the census data shows in terms of the number of vacant properties. But I reckon 1.2 million is probably a conservative estimate.
Oh, look, definitely, no, and not to mention everything else that's under construction, or from turning the soil to not obtaining the occupation certificate. There's a lot out there, and predominantly around strata complexes or medium or high-rise developments, and yet the government wants to keep on. That's their focus. Wants to push more strata development, but predominantly in the high-rise development sphere. But yeah, that's the grand scheme. And that reminds me, I still haven't got a reply back from Mr. Adam from the leader of the Greens. He still hasn't taken up our offer, our invite to come on the show, mate. Now, I wonder why. Because I'm itching to know where these million homes that he proposes to build are going to be built.
Yeah, absolutely. And how they're going to be built, who's going to pay for them, and what type of properties will they be, will be the questions I'd want to ask. But it's funny, isn't it, how top-line headlines don't necessarily translate into anything below, right, other than the top-line headline. And talking of headlines, the numbers are still doing, well, weird things.
Well, they are. Look, it is. They're surprisingly, they haven't, they sort of pulled back before the long weekend, but they're back up over the 7,000 homes on market. Close to, on Monday, I think it was about 7,300. I've sent you the screenshots. The current numbers on market is 7,173 for freestanding homes. Overall, there's 17,211 or so properties for sale, but apartments are staying up there above the 8,500. And I've got a feeling before they start going down, they'll continue to rise. Properties on market will continue to rise until, in my opinion, until at least 4 or 6 weeks after the election. Whoever takes power, because that's when there'll be a bit of panic, because that's when the major population are going to find out that regardless who takes the helm, it's going to be a open door policy. That's just my feel. That's just me. Dusty agrees with me. Evan's of a different opinion, but we're sticking to our story.
Absolutely. And of course, the other interesting thing is that the auction clearance rates continue to go down. We'll cover that in a second. But there are still quite a large number for auction. So there is still a real burning desire from some people to try and get shot of properties at the moment, right? And again, my analysis and my survey suggests that there are a number of people who are now quite worried about the forward trajectory of prices and are being told to get those properties on the market so that you can try and capture some value before prices fall too much more. And again, a bit later, we'll touch on some of those price falls, which everywhere you look, there are price falls now, right? So it'll be very interesting to see this sort of rush for the exit. My question, I guess, is, well, in this environment, are auctions actually sensible, or should you be looking to try and do a deal before the auction?
Well, in terms of let's say the overall reason for people going to auction, I think a lot of it comes down, in a premise what I'm about to say, with a conversation I had with when we were having some drinks with the real estate agent yesterday. He has a big rent roll, and it's because it's a quickest way out. It's a quickest way out, and in a way, it's the cheapest way out. And I don't mean by way of marketing, the marketing campaign. I mean by the fact that a lot more things and issues with properties can be hidden under an auction campaign than what they will under a private treaty. Unfortunately, if they move beyond the auction campaign, then they fall in the private treaty heap, like everything else, and people are going to be more wary and going to be have more time to do their due diligence. So when the agents are trying to create this hype and this urgency of a sale, we're going to see a lot more of underquoting, which is the unfortunate thing, and the consequences of when markets start to go down and agents can see that, they will underquote it in order to create some emotion, in order to create some urgency, and for people to upbid on the day. Now, it works in some cases, but I feel in most cases a lot of these properties fall on their ass. So this is where we're going to get a lot more auctions, because of as I said, it's cheaper. It's a cheaper way out for investors and for some homeowners, because they don't want to take on the maintenance, and they don't want to take on the proper repairs of the property before they go to market. So they try to hide that, as you and I have spoken about over and over again, till the cows come home. We can talk about the dodgy building and pest reports. So that's why I think the auction numbers, or sale by auction numbers, are going to remain relatively high for that reason. And I was going back to So yes, yesterday I was having some drinks with, having drinks with a couple of property managers. They've got rent rolls, and one of them said over the last week he's had 7 rentals. He's had to basically get the tenants to vacate. And reason being is because now the properties are predominantly 95% being homes in a couple of townhouses have got mold issues because of all this rain. So there's a lot of issues, and a lot of these issues that are arising and that haven't been attended to over the years by the owners, by the investors and the property owners and the property managers are now coming home to roost, and the tenants are being affected. So it may seem insignificant when you talk about 7, but when you talk about in 1 week, when you start talking, and that's just between a couple of property managers, how many more properties have got issues, and how many more properties are out there out of the 3 million rental homes, or let's say the million rental homes in New South Wales, 1 point something million rental properties in New South Wales have got issues that owners don't want to fix and they want to get rid of very quickly. And the auction campaign is the quickest way out, mate.
Absolutely. Yeah, well, definitely seeing that. And interestingly, the latest gross and net yield analysis for both New South Wales and Victoria shows that things are not actually improving. So a lot of property investors are still underwater from, if they can let them. So as well as the structural questions and the mold questions, the other thing that's driving some of the sales is that property investors are waking up to the fact that when you've actually got a negative cash flow on a daily basis, and when there is no capital growth prospect now, and probably not for the next 2 to 5 years because of where interest rates are going, why would you hold on to investment property? It's interesting that when the review of what happened in Ireland after the global financial crisis was written, they highlighted the fact that it was the investment sector that was the sector that went first, because basically property investors suddenly said, hang on a moment, there's no point in holding this investment property if there's no capital gain, if I can't make a return on the net cash flow basis, why am I holding the property?
Yeah, and if I can't negatively gear because I no longer have a job, it's money out of their own pocket. So not to mention the fact that it's costing them anyway until they can quantify it by the capital growth. But as you said, and predominantly a lot of these investments are in strata complexes that have got issues, and they're seeing a negative return. So the costs are going up, but the returns are not there. And as young investors or even some seasoned investors, face the issue of the fact that they don't have the business that they used to have, or they don't have the job that they used to have. Well, they've got to make those decisions. So I see the numbers are healthy. I'd like to see more freestanding homes on the market in Sydney, because Sydney is not a very big market. But I'd like to see at least another 500 to 1,000 before we get to the spring selling season, because that's going to be an eye opener. As you know, again, historically, from winter to spring, we'll get a rise of anywhere between 22 to 27% rise in listings, on market. So this is going to be very, very interesting.
Absolutely. Well, let's move on to some of the articles, because there's some really tough, interesting stuff to talk about. One of the ones here is that businesses are actually buying homes for staff, right? So they're actually up against individual purchases.
Yeah, and this is this going to be a new trend? But then again, you got to ask, where have we seen this? Where does all this happen? We see it in China, obviously Japan, and a lot of the Asian countries. I commend these small businesses for taking the initiative. But when you've got multiple staff, when you've got businesses, you've got 10, 15, 20, how many properties can your business hold? And if your business is one of the industries that is somewhat wobbly, whether it be the tourism industry or let's say the hospitality industry, I mean, do you risk it all? It's one of those things. I think, look, the initiative in itself is is good. I commend the some of the businesses. If you want to keep good baristas and good head waiters or chefs, well, maybe that's what you have to. Maybe that's what you have to do. But it's shameful that government policies over the last couple of decades have let our own the Australian people down. It's absolutely shameful. Well, what do you think, Martin? Is it a good idea or a bad idea?
Well, I think it's a necessary idea because of 20, 30 years of policy failure. But of course, the question is, what's a reasonable rent at the end of the day, right? So do they charge a full market rent, or do they charge a lower rent? And if they do that, does it mean they can pay them less? I mean, there's a bunch of consequences and follow-ons that could actually change some of the economics of employment.
Yeah, and I mean, well, look, with property management, it can be a minefield as well. And as you said, it'll change a lot of things, the economics of employment. It'll change a lot of the, if you've got, do you put one or two groups of people in the same house? Are the properties going to be shared? All these things arise. But look, for me, one of the things that sticks to mind and is because the tenants will know who the owners are. Are they going to be good tenants? Are they going to be bad tenants? Are they going to be demanding for things to be fixed? It changes a lot of the dynamics. How you socialize, how you working. Your boss is not only now your boss, is now also your landlord. So yeah, it's an interesting thing. But look, the Asian community have been doing that here in Sydney for a long time as well, since probably 2014, 2015. You've got the little brothers and the little sisters that work for a business or a company. And they find them accommodation and they keep them there, and it's easy for them to go. They know where to pick them up from, and they know where to drop them off. And a lot of these, the little brothers and the little sisters don't even, in some cases, because they're paying off a debt for the amount of money they borrowed to come over. And to stay and all the paperwork that they've obtained over in Asian countries, it's cost them a fortune. So that you could say they don't see the sun, the day of light, the light of day, because they basically they go to work from where they reside, and back from work when the sun goes down. It's a shame. There's a Chinese restaurant in the mountains that I think it's 5 or 6 little brothers there that run the restaurant for the owner, and that they don't get a day's rest. And some of them that we've spoken to, some of them have been here 2 years, and they don't even know how to get to the Opera House or the Harbour Bridge. They haven't seen it physically. That's So look, there's a lot to unpack with that, but I'm sure they're going to be more hospitable, and there's going to be better policies and better standards in place with local businesses that are going to do that, as opposed to the Chinese community when they bring in people from overseas and how they ride them for every single ounce of sweat, unfortunately.
But the point, of course, is that if you actually are renting a place from your employer, and that is effectively part of the deal, then you're not really free. You're not unfettered, and that means that you're probably going to be much more reticent to raise an issue or to complain or talk about rights or anything like that. So it does changes the dynamics horribly, doesn't it?
Oh yeah, and then then just before we finish on that point, Martin, then you've got the issue of occupational health and safety. And where does it end?
Yep, I mean, absolutely. I was going to say, what about the accountabilities that actually then flow through from that? And as you say, occupational health and safety, the tenancy acts and laws and things. I mean, there's a bunch of things, isn't there? And talking about things that look a bit weird. I've had so many people share with me information about properties where prices have started to fall. One swallow may not make a summer, but when you get a whole flock of swallows, that tells you something, doesn't it?
Oh, that's right. One rice doesn't make a meal. But when you got 1,000 of those little bastards on your spoon, it does. You can chew on them. So, it's interesting what this what's her name, Melissa, the article that came out in the Sydney Morning Herald, and that she's making a big song and dance about the fact that in Yarraville, house that was sold for 1.62 million was passed in at auction at 1,405,000. And when that came up on my feed, and I was and I saw the head, I had to read it. I had to, and not only read it, I wanted to do some background checks on that and try to get a better understanding, because I know that the Victorians, the real estate agents there are more notorious for underquoting. And look, if he walks like a duck, if he quacks like a duck, and if it looks like a duck, it's got to be underquoting, in my opinion. And when I posted some of what I found and some of the commentary that came up on my Twitter feed, it's really interesting. That's why I tagged the author of that article and I said, what did you expect? What did the owners really expect? Could they expect a different outcome when a property that was bought to for 1,620,000 and it gets busting at auction for 1,400,000 a couple of years down the track? What do you expect when the agents are guiding the property at 1,300,000 to 1,400,000?
Mm. Yeah, well, the underquoting thing is a really big deal, and it's getting worse. And as you say, Victoria seems to be a particular hotspot, as a number of other people have been calling out. But it is fairly widespread. But it shows you it's quite hard now to get a real clear value anchor for property, right? Because values are starting to move around and they drop quite significantly in places, which means that a lot of the official numbers are actually out of date before they're ever published, right? Which means that it's quite hard to really know where true value is. And as a result of that, there's more latitude then for agents to make up a number and throw it out there.
Yeah, and it's sad. It's sad, the fact that they take the liberty to try and hoodwink the general public. But I think the general public has become a lot smarter, and in particular over the last 3 to 4 years. There are a lot more websites. I don't use the domain app because that's all over the place. There are a lot of other websites that you can punch in the addresses, whether no matter where you are in Australia, you can punch in any address and it'll give you a good background on the property, and you give you a clear understanding, to the point where some of our Twitter followers come up with their own algorithms and so forth, and come up with their own formulas where, as I've said for many years, and they've taken on my advice that I've been sharing for many years on my social media platforms, and that is when you work back to the basic levels of the land values, the fixtures and fittings, or the building that's on there, plus fixtures and fittings, or the let's say the renovations that have been done, you can get a very good idea. You can get a general idea if you know the cost of building, the cost of construction in general. You can come up with a very close idea as to what the properties are worth, and then also, as I've done for many years, you just have your chats with your developers and work out what the current building costs are, and what especially if it's a development site, what they're planning to do with it, and what they're going to, how much they're going to sell it for. And then you either add or subtract the market sentiment. If the market's going backwards, you subtract 10%. If the market seems to be on fire, well, you add 10%, and you come out with a very, very close indication as to where the end value is going to be. And this is where these bastards that underquote are not doing their vendors any justice. They're not helping anybody at all, other than trying to get a quick sale and try to hoodwink the general public, and they're going to be falling on their ass more and more. And that is, if you're going to be underquoting a 1.3 to 1.4 to expect there to be a frenzy in a turning market, in a cooling market, Well, Dipstick, you're not going to get there. I'm surprised that it even got an offer of 1,405,000, Martin. I would have liked that off. I would have liked the one and only bid to come in closer to the 1.3, because that's where it should have landed, based on the guide that the agent provide based on so-called sales of in the area.
Absolutely. No, it is a very interesting, and as I say, in a turning market, it's ever more tricky. But our statistics shows a similar story, doesn't it?
Yeah, and I picked this one up from Power, because it's also in the same area. And it's showing a failed auction again. That's that's now on a private treaty campaign. I haven't done any background research on it. I don't have a core logic or RP data for Melbourne, so I can't see what goes on in the background. I can see what goes on in the background of properties, how they've been marketed over the years, sales and everything else in New South Wales. But I don't have subscription for Victoria or Queensland, so I'm open for some assistance with people like Catherine Cashmore. She's got the finger on the pulse in Melbourne, so she sends me some background information. But look, we're going to see more and more of that, and that's what's going to happen. What's going to happen with this, with the shenanigans and the flawed marketing campaigns that agents are promoting, short of calling them underquoters, and look, the losers are their own clients. And that's what we'll share a little bit more later on the tips as to how to be more control when you attend these auctions.
Absolutely. But there's another factor as well, isn't there? And that is that if you're actually rocking up to buy a property, you might well be competing with a developer who has a completely different value lens, because they can think, well, I can knock this place down, I can put up something different and make a turn there. That often actually also crawls the nest, doesn't it?
That's right, and this is what I go back to. When we say when you're going to buy in a hot market or in a cooling market, no matter where you're going to buy, always buy with an upside. This is what developers do. They're always looking for the different angle in order to add value to the land, so that they can get a return at the end of the day. And look, and it's proven that unless you can show the bank that there's a minimum 27% return on your investment, or the banks funding your development on the other end, well, they're not going to lend you the money unless you've got a lot of money underneath your mattress at home that you're prepared to throw in. So that's how banks, that's a rule of thumb. That's how banks will look at a construction funding or development site funding. There's a lot more that goes into it, but that's the general rule of thumb. So in this particular one that I point out, that I brought out on, that I wanted to attend, and I attended on the weekend, for no other reason other than the fact that it was just sheer underquoting. I know the previous agent that had on market in December, January, and I know for a fact that the property, the owners got offered 2,350,000 when he was guiding the property on his auction campaign at with a guide of 2.4 to 2.5, which was a more reasonable guide. That this is just for an owner occupier. This is without development potential. This is simply 2.4 to 2.5, because it's renovated home, has a sleep out, swimming pool, and the like. The only thing it lacked was was a garage. So and he pegged it at 2.4 to 2.5. So he lost the listing. His auction campaign failed because the owners at that time did not want to accept any offer below 2.4. So along comes a new agent and gets the listing, and lo and behold, the marketing campaign starts with a guide of 2 million, mate. 2 million from only a couple of months ago. The vendor's expectation was 2.4 and above. I can tell you that unless the 4 developers that were present at the auction, unless they were there, the lady that wanted to go toe to toe with one of the developers, she would have got it for closer to 2 million, because the opening bid was 1.9, and it was only when the vendors, so when the developers chimed in, that they ran ran it all the way to 2,350,000. Now, this is the interesting story, Mark. So I know a couple of them. I've met them a couple of times in the Shire when they as you do your rounds, as your tent opens and auctions around there looking for clients. So I know a couple of them, and I know one of the another local agent that I know that was present as well. So we were having a chat, and one of the developers that currently holds in the area anywhere between 23 to 27 sites, he said, was present, and he registered. So I said to him, "Jesus, mate, you're what, you want to buy out the whole Shire, do you?" And he laughed and he said, "No, I'm just here. Get this. You're sitting down, Martin, hold on to your toupee." He said, "I'm just here so that no other developer gets this block for cheap." And,
Wow.
and guess who was the underbidder on that property where he drove it to? He drove it to 2,303,000, and then the final bid was 2,305,000, and he said and then he just walked away. He said, "Right, I've done my job." Now he was prepared to buy. He's got the cash to buy it. He happened to be the final bidder, but the sole reason why that developer was there so that nobody would buy that. No other developer that's in competition with him in the area would get that property cheap. That's what I'm saying. That the only reason that saved the ass of this vendor, the agent, and the sale is the fact that there were 4 developers there because it was a development site. So when you work the numbers, when you work it backwards, a duplex in the area is selling for 2.2 on average. This got sold for 2,350,000. Then you add construction costs. As you said, you can build it for 1.2 and get something decent. So as far as he's concerned, there was a good earn in it. But he's got 23, 27 other developments going. He didn't really want it unless for no other reason other than to, as I said, to control the price of his developments that he currently holds and the resales on the other end. So how do you like them apples? And then we've got idiots going toe to toe with developers on the day.
Well, I've heard of it before, unfortunately, and there's a lot that goes on, as I say, when developers are involved. There are all sorts of agendas, not least, as you say, just keeping the prices up high, right? Because it's in their interest so to do. But it does show you that sometimes what you think is happening and what is actually happening is quite different.
Yeah, and then we've got the next example of a property in St. Clair. Now, and again, this is where the agents are going to fall on the sword moving forward, and I'm not going to cry about it. You got a property in St. Clair that was guided at 993,000. That was the guide, and now it's currently being marketed at 1,450,000. How do you like them apples?
Well, they can't both be right numbers, can they? I mean, there's clearly something deeply, deeply flawed. Again, presumably underquoting.
Look, definitely it has to, because look, the thing is that an inferior property, not say 10% or so inferior property than this one, sold around the corner for 1,275,000 or thereabouts. I mean, to go to market at 983 was ludicrous, and that was the guide 30 seconds before the auction, and there was no bids. Now, another agent that was there, I wasn't there at this auction, but another agent that was there told me there was no bid. It was a shambles. Nobody wanted to bid because everybody's looking at each other and saying, "Shit, this is worth almost, if not more, than the one that just sold around the corner." So why are these agents, advertising it or guiding it at 900 and below the million? So, needless to say, the auction was a shambles. It fell over. But the reason why it fell over, and the reason why they got no bids, Mark, was because it had no development potential. See, when you start underquoting and you bring in your normal buyers into the mix without developers, well then you don't you don't get this frenzy in a turning market. And this is where a lot of agents, as I said, are going to fall on the sword. And I just only wish that they'll be there to just sort of press it a little bit harder.
Absolutely. And you want more examples of underquoting? We have them.
That's right. And this is one of our followers sent it through, and I promised them I was going to share it with our followers tonight, today. And again, it's when you do. I guess I've got the benefit of being able to look at privy to the marketing campaigns of past and what agents have wanted. And again, when you look at if people go on my Twitter feed and they look up this example, they'll see there that again they're originally looking for something like $1.6 million, but yet the guide they guided so low at 1.4, and they expecting the market to sort of create that frenzy, create that emotional need, and that psychological. I need to have it today, otherwise I'm going to be sleeping in the dock house. My partner's not going to love me anymore. Blah blah blah, all that sort of stuff. And he falls in the house. And then when they go onto a private treaty campaign, when they're guiding 1.4, and then they go back to a private treaty campaign, you see that they're actually looking at closer to the 1.6. You can only ask yourself some the hard questions. I just only wish that Fair Trading would subscribe to CoreLogic and start calling these agents to account.
Absolutely, and the analysis that you've got there really shows the trajectory, and it shows you the power of data, actually, doesn't it?
But again, what do they expect? What do they expect? They've set the expectations, and in a turning market, you're going to set those low expectations, thinking that you're going to get a different outcome. Well, you've got rocks in your head.
Yeah, and I guess we should cue Tom Panis at this point, because he came up with a gem of a quote, didn't he?
Oh, well, that's right. As we said, he's my adversary. He stands on the other side of the ring. And said, never before has there been a generation of agents more obsessed about looking like they're doing the job rather than actually doing the job. I thought he nailed it.
Yeah, bingo, absolutely right. And but it does underscore that if agents don't do their job properly, right, then you end up with stupid results, and people can end up often, as a vendor, not actually achieving what you might be able to achieve, or as a purchaser, you end up with, well, you don't know what you bought, right? You could be buying high, you could be buying low, who knows?
Yeah, and let's look at some of the numbers behind all that. Let's say, for example, you wanted 1.5 million at 2%. That's $30,000 commission, right? So I go and put your property on the market, and I underquote it at 2.2. Although I told you, yeah, Martin, you're 100%. Your property is worth 1.5 million to 1.6 every day of the week, and these are the examples. Blah blah blah. But then I go and start a marketing campaign at 1.2. So it's a hell of a lot of money between 1.2 and 1.5.
Yep.
It's $300,000 in your pocket. That's a hell of a lot of money. But guess what? Look at the commission component of it. From 30,000 to 24,000, not a lot of money.
No.
It's only 6,000. So how much harder do you think the agents are going to work for the extra 300 to put in your pocket? How much harder are they going to work for the extra 20, for the extra 30 to put in your pocket when it's a 2% commission? That's only what, $600. So this is the mentality, and this is the what I've seen for, as I said, I've worked both sides of the fence, and I see it, and I see it over and over again. How if vendors only realised the stupidity of allowing of allowing agents to underquote, and what it really ends up costing them when they go to auction. In my opinion, I reckon that even 70-80% of the homes and properties that are actually go to auction shouldn't even be going to auction. They get a much better result out of a private treaty campaign or a silent auction. But anyway, that's another chat for another day.
Well, but especially now, especially with where the market is turning and all those things, I think that's probably right. The other point I'd make is that you don't necessarily have to accept the linear commission structure that is often tabled by an agent, right? I've known examples where effectively the vendors said, look, if you get above this amount, I'm going to pay you this, but if you don't get that, then I'm going to pay you a lesser amount. So you can mess with the with the incentives as well.
Well, yeah, in Queensland, I've sort of got that more down to a T, where up to a certain amount there's a percentage, and beyond that there's but that also has its flaws, because in a rising market or a hot market, unfortunately, agents, because the majority aren't, the minority aren't ethical. They'll tell you that your property's worth. They will convince you that your property's only worth 1.3 million.
Yeah.
If I get you above 1.3 million, I'll take 20 cents in the dollar. Now you think, oh shit, Edwin's such a champion. What a legend. And then I get you 1.5 on the day. That's an extra what? That's an extra $40,000 that you're paying me for. $60,000 that you're paying me on top of the 24,000. Happy days for me, but unfortunately, you got hoodwinked, and this is what happens.
Yeah.
This is what happens with these incentives as well. I've always said that one of the ways to curb a lot of these shenanigans is to in a contract of sale, to disclose the commission percentage or the way the agent has been remunerated.
Yep.
And it's that don't you have to disclose that with other financial products, Martin?
You do, indeed. You do, absolutely, particularly of mortgage brokers and things like that these days. So, that would be, I think, the veil would be lifted, wouldn't it? But a lot of agents wouldn't like it.
Of course, the REIs, the ones that diddle and daddle with trust accounting and the presidents, and that steal other people's signboards and shit like that in Victoria, and blame the vendors. The vendor made me do it. I mean, of course they don't like it, because it all comes from their bloody halls in the kingdoms of the REIVs and the REI New South Wales and the REIAs. I mean, you can't do that. And go back to Tarek now. Tarek brings a bit of greater light and a bit of what would you call it? A bit of sanity when we find out that the auction clearance rates, the real auction clearance rates, as I said, Tarek's always closer to the Louis Christopher's ones as well that come out from Square Meter Research, and we're looking for the Anzac weekend 40% as opposed to last year of 68%. So things aren't as buoyant as what a lot of vendors would like them to be. But I say that I think what their agents are doing in the marketing campaigns is letting a lot of vendors down nonetheless.
Yeah, and I agree with that. And, the volumes may be slightly higher, but the clearance rates are significantly lower. And, I come back to my fundamental point that I made earlier. Maybe an auction route is not the right route given where we are at the moment, right? For all the reasons we've discussed. So don't necessarily be persuaded just because your agent thinks that the auction is the route to go. Worth asking a few more questions and just probing as to whether it really makes the most sense, because in the current environment, there may be better options.
Yeah, and there's various reasons for it. As I said, unless you really want out quickly as a vendor, unless as an owner, you really want out quickly for economic, financial partnership, legal issues, or you want to move on, or you've already purchased. I mean, at the end of the day, the auction campaigns of late of 3 weeks and the sale on the 4th, all that's really benefiting the majority is the agent, because they're walking away with a quick commission and they don't have to do the work that would be expected. If you don't have to sell quickly, if you don't have to if you're not under all these other pressures, just make the agent work harder. At the end of, I wrote something about I think it was about 9 or 12 years ago. I broke down the remuneration of an agent, commission as to hours worked, and he worked out something like selling agents getting, on average, and I've talked about averages across New South Wales, on average, you're getting $1,436 an hour. Not bad. Better than a barrister.
Wow. Yeah, that will be a good number. All right, before we close, tip of the week. We've sort of touched on it, but let's underscore it, eh?
Yeah, look, the tip of the week is really ask questions of the agent and ask questions of the auctioneers. And we'll open this up a little bit. When you're visiting the property, if you're not sure, if it's being sold, if it's not in the marketing campaign, and you sort of don't understand what the LEPs are, for the area, what you can, in other words, what you can do with the property in terms of the development, ask the agent, does the land offer development potential? And if such as a duplex, and if the answer is yes, ask how much a duplex is worth or going for in the area. They'll tell you. So get as much information as you can. Obviously, you can get that information from the contract. You can get that information from council sites to determine how much land you need and so forth, and then you can work backwards from there with regards to what a developer is going to pay for the block of land, because they're not interested in the dwelling that's on it. They just want the block of land to add value to the land. And obviously on the day, Martin, I don't know why people jump in and without asking. Ask, is the property on the market?
Yep.
What's the point of bidding if the property is not on the market? Why fuel the fire anymore if the property is not on the market? Now, when they go to my Twitter feed of the account of the 24 Pacific Road there at in the Shire, when they go to that Twitter feed, and I actually, in that Twitter feed, I as I'm commenting as the auction is happening, and I'm calling out the bids and I'm typing them up on Twitter, you'll see how at different times one of the developers actually asked the agent, "Is it on the market?" And he didn't chime in until the agent said, "We're on the market." I mean, so these guys know how to buy. So what's the point of chiming in and fueling the fire if it's not on the market?
Yeah, well, you've disclosed your hand earlier than you might need to, and you're stoking the flames before you know whether it's actually going to be sold or not. And sometimes just being quiet and watching what's going on and let things bubble along makes more sense. And it's worth underscoring again, Edwin, that the psychology is the agent wants everybody, the auctioneer wants everybody to chime in and to show there's a lot of support and everybody's. So actually, he's wanting that, but actually, the question is dead right. Is it on the market? Because if it's not, just stay stum.
Yeah, that's it. Or if and the only other time is chime in early and hold. Don't show your hand.
Yep.
That's a tip for the week. So hopefully, we'll see less. We'll see more. We'll see more properties being passed in at auction because our followers are adhering to our advice, mate.
No, well, let's hope so. Well, thanks very much for that, and enjoyed catching up with you on a Tuesday morning rather than Monday evening. But we'll come back to Monday evening next week, I guess, and we'll do it all again then.
Well, it's going to be harder for the little bastards to pee on the PC. They can pee on the laptop, but they can't pee on the PC.
Very well. Okay, we'll keep it covered, and we'll look forward to next week. See you then.
Thanks, mate. All the best.
Cheers. Bye.